Hey guys, welcome back to the channel. Today I'm going to be providing a market analysis for Harmony 1. I'm going to be covering some very important moving averages to look out for, a very important level of resistance where we've actually just rejected off of right around 3.3 cents, and then in general my longer term outlook, my stance on Harmony 1, and then some things that I'm looking out for in order to become a lot more bullish. So if you guys enjoy the content, please do consider leaving a like and subscribing. Also, this channel is sponsored by FTX.us. This is a great cryptocurrency exchange where you can buy, sell, and trade cryptocurrencies like Harmony 1. And if you want to sign up with my link in the description below or through my referral code SNOWYCRYPTO, you can get a 5% discount on exchange fees. Alright, so let's dive in here to Harmony 1 and let's just first talk about this strong resistance level around 3 to 3.3 cents. And it's really important to understand why this is strong resistance and the fact that, if we go all the way back here to basically since inception, since Harmony 1 launched back here in 2019, this was the level that we had our peak at. So this was the high of 2019. From this point, we were basically in a very strong and dominant downtrend, taking us to the lows later on in March of 2020. So this is a very key level, being the high of 2019. And then if we zoom in here, you can see that this was actually a level of strong resistance back here in February of 2021. And following the retest of this level, we actually retraced about 56% in just the following 9 days. So very strong and sharp rejection from this area. And again, we did have a move that took us right back up into this level. You can see it was actually previous support right here on the low on the May 12th capitulation candle. But now we've actually flipped that into resistance. So we have had a retest of that area, and you can see we've come back down since that point by about 35-40% or so. So the thing to watch out for in the next few weeks is if we can have another surge back up to this point and to see if we can actually reclaim this, because reclaiming this level, again, around 3 to 3.3 cents, longer term is going to really convince me that we do have some sort of longer term low in place. And the reason that is because we would have a change in the market structure. If we are to come back and reclaim this level, then we would have at the very least a higher high on the daily, and depending on when we do turn around, that would also correspond to potentially a higher low or maybe some sort of double bottom. So that's something to watch out for. But again, that is still very far away. We do have at this moment a very solid rejection of resistance right here back earlier on in August. So I would look to this level as longer term resistance until proven otherwise. Another level that we should look out to is the 300-day simple moving average. So that's this yellow line on the chart here. And I just want to point out to this because it is going to be a very important level to watch for in the next few months. Obviously, we can't look to it today because it's all the way around 13 cents and we're all the way down here around 2 cents. But consider the fact that this is going to start moving down pretty aggressively because it's taking the average closing price of the last 300 days. And 300 days ago, we were really at these highs, around the 30 to 40 cent mark. So we're down over 90% from there, and it's just going to be averaging down at a pretty quick pace. So if we're just extending this moving average out, I just want to show you how it could be relevant going into the end of the year given its current pace. Again, you can see that it's starting to move down at a quicker and quicker pace after having been rounded off for several months. And when we do retest this, whether it be in the end of the year or in several months after that, when that happens, we should look out to that level because it is going to be a very key retest. And basically, this was the level that we held support during the bull market. We had two key retests, two bounces off support right here in 2021. You can see both times we held it as support, we continued higher. And then we had another retest right here in December. And then from there, again, we did continue higher. And then eventually we had this test back here in February where we didn't really experience a bounce off of it. We just kind of consolidated. Eventually we came back down and then we flipped it into resistance. So you can see two key rejections, one here in March and then another run in April. So the point is this has flipped into resistance and we have not had a retest of this level since we rejected off of it back in April. So the point is, when we do retest this, it is going to be very key because if we're going to be into a bullish phase, if we're transitioning into that longer term uptrend, then this is the level at the very least we do need to reclaim. And again, it is a 300-day average. 300 days ago, we were much higher, so this will continue to average down. And depending on what we do going into the end of the year, we could have a retest coming up here in the next few months. Again, consider the fact that by the end of the year, it could be all the way at around 4 cents, or if we have say a leg up, a more abrupt leg up taking us to 6 to 8 cents, we could have a retest towards earlier on in quarter 4. So in general, that is the level that is the longer term area that I do want to see reclaimed, because again, when you are in an uptrending environment, you can experience a pretty nice bounce off of this level. You actually had 4 bounces of support back here in 2021 as well as earlier on in this year. So that is the key levels of resistance that I'm looking out for. Let's talk about the support area around 1.7 cents. So do notice how the current lows are right around this point. You can see we actually bounced here back in July, and we also had this retest of support back here in February of 2021. So I would look out to this level as some sort of support, but if we're starting to break down, if this does not hold, the next area I'm looking out to is going to be the high of 2020. So that level is right around 1.4 to 1.46 cents. So if we are to continue lower and these lows do not hold, I would look out to this 1.4 to 1.46 cent level as our longer term level of support. Seeing as how that was the macro resistance we held back here in 2020, I do expect that to be strong support on any sort of retest. And consider the fact that from this point, we actually rejected by about 70%. So a very significant decline. And keep in mind, this was when Bitcoin was gearing up into that bull market phase, and Bitcoin actually had its own correction of around 15 to 20%. So a big reaction to this level, and that's how we know how it is important. Again, if we do have a move down to that area, I would consider this to be an area where buyers in demand would start to step in. So I hope you guys did enjoy the longer term analysis on Harmony One. As always, if you enjoyed the content, please do consider leaving a like and subscribing. I hope you enjoyed, and I will see you in the next one.